Okay, we will talk about the depreciation system now. So, what is a depreciation? In the economic analysis, we have to invest in some of the assets. Okay, depreciation. Um Depreciation. While investing in assets such as I, I invest a amount of rupees, suppose 50k to a machine which gives me annually return of 10k for about 6 to 7 years. 6 to 7 years. So while it is giving me this money of 10k annually, its value is decreasing. The value of these assets is decreasing from 50k to some of the value. So some value at the life. Suppose the life is 5 years. So at the end of 5 years, its value will be as. So this amount of this nature of declining the value of asset, declination of okay value of asset is known as depreciation. These are different methods of value or simply calculating depreciation. The very first line is straight line method. Straight line method. In this straight line, we have our purchase value or simply investment. And we have our salvage value. This is the value of asset at the end of nth year. Is divided by our total nth year or simply the number of year this is we have used. And we have now this amount of decay, which is known as depreciation amount for each year. This is known as salvage value method. Okay, here our inflation is absent. Our money doesn't gets affected by the inflation. Simply, second method is declining balance method. Declining, sorry, declining balance method. Balance method. In declining balance method, we have the constant percent of decay or simply constant uh, percent of amount. Constant percent of previous periods is changed for the depreciation amount. Okay, depreciation charge decreases with life. In declining balance method, depreciation charge decreases with the time, simply time. And we have the salvage may not be the problem, or simply our depreciation amount is simply 100% upon, and or simply depreciation not amount, depreciation rate is this rate. Yeah, uh, we have at the end of year, at the end of 0 year, at the end of 1 year, at the end of 2 year, we have the value of amount is bk, our depreciation amount is db. The value is depreciation is 0, so value is 100k, assume this value. In the second year we have 100 plus, okay, 100 plus, suppose the year is 5 year. Okay, so this is our 20%. So our first depreciation amount is 20k. Is 20k of bk, simply the value of amount at the previous year, or simply the value of the asset at the previous year is 100k. 20% of 100k is 20k. Now we have the value remaining 80k. 20% of the 80k is 16k. This is our depreciation amount, and this is our the value of assets after it has been depreciated for an year. So this is how declining balance method works. Our second method is our third method is of depreciation is double declining balance method. Balance method, but here double declining balance method is double declining ddb. Rate is simply 200% upon n. Here simply we can see that our depreciation rate simply doubles. And here in these types of questions, if the double declining balance questions, no salvage value is given, and also in in declining balance method, no salvage value is given generally. Okay. uh, no, but we need to talk about the straight line method first. So let's take an example where our 100k, our amount, this okay, 50k, 50k worth asset is bought, and we have the time of t equals to 5 years, and we have salvage value of 20k, simply at the end of simply 10k. Let me assume that this is a 10k, this is a 50k. So our depreciation amount is 50k minus 10k upon time is 5 years. So this is a 40k upon 5 years. This is 8k per year depreciation. Simply we can plot that at the end of first year our depreciation, okay, our amount, our worth of the asset is 50k, and it has now declined by 8k. After that it is also declined by 8k. This value is same, 8k, 8k, and again 8k. This is 1 year, 1 year, 1 year. This is 8k, 8k, 8k. Here the slope of this line, this line, this line is same, so it is known as a straight line method. So I was just trying to prove that why it is a straight line method. um, I think these are all about depreciation, simple techniques of evaluating depreciation. Now we will talk about the taxation system in Nepal. So simply for evaluating, so why is taxation system necessary, and why is the cash flow, how the cash flow, simply cash flow, is evaluated. Okay. uh, we have our gross income, or simply a revenue. This revenue is generated from different uh, sources. This is gross income, not a directly gross income, but this actually relates to gross income. And we have our operational and maintenance costs in the factory. Suppose we are running a factory of sugar can, and we have the gross income from selling our sugar, and we have operating and maintenance cost. We have to subtract that cost to calculate general gross operating income. So after evaluating gross operating income, we have to subtract depreciation. If we have assets, and it is being the asset is being depreciated by certain amount, like we have discussed in the earlier sections. So we have to subtract the depreciation amount, how much the machines has been depreciated, amortization, different drains, from gross operating income, which will give us our net operating income before tax as well as before interest. So this is our net operating income before tax and income, tax and interest. Now we have our interest expense. We need to subtract this interest expense, and then we will get earning before tax, and we have to subtract the tax thereafter to get the our simply cash, or simply earning after tax. uh, so this is our cash flow, general cash flow, or simply corporate. Now we will talk about tax in Nepal. Simply, there are two types of tax: direct tax and indirect tax. Indirect tax are the tax that we direct tax we pay on different materials we use, such as salt and general food items. We pay VAT amounts. This is indirect tax. We while importing and exporting, we pay taxes. This is known as indirect tax also. And we have our sales as well as service charges, which are also indirect ways of indirect tax. Our direct taxes, we pay taxes on our property to the government. Property. We have our income tax, that is our direct tax. Income tax could be a personal tax as well as our corporate tax. Corporate tax. And we have different tax slabs that are actually listed on, was not listed, that are acknowledged, or simply that are present in our uh, budget, our budget uh, document that is generally passed through the assembly. So this is how tax system works in Nepal, the general brief overview. And this is how the cash flow of general cash flow for any uh, factory. Okay, thank you for being with me. We will talk about other things next time.